What's going on, guys? And thanks for joining me for another blockchain future. It seems that there's some friction between the legacy financial institutions and the companies that are using cryptocurrency, specifically exchanges at this point. I have three different articles here. One from Bloomberg, which I believe represents more of the legacy financial institutions, the more classical thinking of finance. One from the Daily Hodl, which I would say is like in the middle about the topic, and then one here from Block One Daily, which pretty much is saying what kind of is in my mind about the topic. But let me start with what Bloomberg is saying here. Why crypto companies still can't open checking accounts. Just go to your local Chase branch doesn't work in crypto. The gatekeepers of mainstream commerce are keeping their doors shut to cryptocurrency companies. Entrepreneurs in the digital assets industry from New York to Hong Kong say that even as some attract investment from multi-billion-dollar institutions like Singapore's sovereign wealth fund, they are routinely refused basic banking services by the likes of HSBC Holdings plc and JP Morgan Chase & Co. While top-tier banks are getting more crypto-curious, JP Morgan rolled out a prototype digital coin last month. Most see the growing number of companies in the industry as they have since day one, ticking regulatory time bombs. Crypto isn't the only novel industry having a hard time accessing traditional banking to support its development. A federal prohibition on marijuana has kept big US banks out of the cannabis industry too. So, as you can see, Bloomberg is taking a stance that the reason why banks are not really dealing with crypto companies, whether they be exchanges or other companies that are working within the crypto industry, is because they believe that they're quote unquote regulatory time bombs. And in a way, I can see that being somewhat true, but also the people that are working in these companies, especially the large financial companies like HSBC and JP Morgan, they have to see the writing on the wall that crypto is the future and that crypto will replace legacy finance. And in a way, by working with these companies, they would be digging their own grave, so to speak. The Daily Hodl kind of goes into this too. And one thing I wanted to point out with this article is it talks about the same topic as the Bloomberg article, but there is this tweet here. Bitfinex is now banking with HSBC through a private account of Global Trading Solutions. Very good fit, if you ask me. It's also worth mentioning that all Euro, Japanese, and Great British Pound deposits are paused, but Bitfinex expects the situation to normalize within a week. Banking issues? This was by Larry Cermak. And the reason why I bring this up is if we look at the Bloomberg article, it specifically says that HSBC is refusing services to crypto companies. So most likely the reason that they are having issues with European, Japanese, and UK fiat is because HSBC is refusing to work with them on those on those money transfers. So this is pretty interesting. Now this next article really gets into what I believe is really happening, and I'm going to read this whole thing because it kind of sums it up and it's pretty short. The cryptocurrency it could be written a little better, but the cryptocurrency is expanding by the day, and hence the traditional banks are terrified. The bank is now blacklisting the cryptocurrency startups and denying to open checking accounts. Firstly, Bitcoin was labeled a fraud by Jamie Dimon, as he said that he would fire any employees caught trading crypto. As per a report, JP Morgan is still refusing to have bank cryptocurrency businesses. But the fact is floating that JP Morgan was quietly working on its own cryptocurrency, JPN Coin. Let me just point out that if you look into JPM Coin, it's really just an internal kind of system that JP Morgan is going to be using within their own company. It's not an open cryptocurrency that will be traded on normal exchanges. And that in itself would be a regulatory nightmare for JP Morgan. And I'm pretty sure they know that. So I really don't think that I wouldn't call the JPM coin a cryptocurrency. It's really just more like an internal IOU. But I'll continue here. The bank is terrified of the cryptocurrencies. The bank is terrified of cryptocurrencies, and they are doing everything to slow down the growth of crypto. Banks refuse to navigate the regulations and conduct due diligence. Instead of blaming money laundering, instead they are blaming it on money laundering. Wall Street's blanket ban on cryptocurrency shows both laziness and fear. This article is very badly written, but it has good points. Basically saying that the banks are refusing service to the crypto companies because of money laundering reasons. AML, anti-money laundering restrictions are put on most financial companies, and that's really on the financial company itself to enforce AML rules. And as long as they're abiding by those rules, I don't believe that the financial institution that they're working with would really have to worry about that too much. If you're breaking the law, your bank should not be liable for that, and you should be charged for that. I'm not an expert in the field, but that just seems like common sense to me. Here's a quote. Quote, "It is not illegal for big banks to bank the crypto industry, but it's a massive compliance headache that they don't want to put the resources in to solve it." And that's by Sam Bankman Fried, CEO of Almed Research. Banks are talking about large-scale legitimate blockchain companies being cut off by traditional finance. Last year, UK mortgage lenders refused to accept cryptocurrency profits as down payments on real estate. Wow, that's crazy. So imagine you made a bunch of profits through trading cryptocurrency, and a mortgage company would not let you use that money to put a down payment on a house. You think money would be money, but these financial institutions are really pushing back. And the last part of this is Bitcoin and crypto offers an alternative system that doesn't rely on third-party institutions. They cannot be confiscated or manipulated by central banks and governments. And the reason why I wanted to read this article, even though it is badly written, I will link it in the description, is I really believe that as we move into 2020, we're actually seeing the larger financial institutions really starting to push back on cryptocurrency because they are seeing it as a threat. This is just my opinion, but I do believe that we are seeing a bit of manipulation with the price of a lot of the cryptocurrencies out there. A lot of times you'll see, I've mentioned this in other videos, you'll see the price start to creep up and then just a giant sell order come in, or a few, and just tank the price down, 5, 10%, 15%. And usually everything is really correlated with Bitcoin. So they do it with Bitcoin, everything else is going to follow until there's a decoupling of the other cryptocurrencies from Bitcoin. Everything is really going to follow Bitcoin as far as the price goes. So the current total crypto market cap is really tied to the price of Bitcoin at the moment. But these banks are really kind of showing their true colors by not banking with people that are making money. It even says it in this article here that although larger banks have backed away from crypto, smaller banks have continued to embrace blockchain-related businesses, a trend that has significantly impacted their bottom line. Silvergate bank in San Diego, for example, has tapped into the $40 billion in deposits generated by crypto businesses. The small community bank now has a roster of high-profile crypto clients, including Coinbase, Kraken, Gemini, and Bitflyer. So that's $40 billion of bottom line money that the banks are, the larger banks are just pushing away. And anybody who knows anything about these banks, why they love money. Why would they push back on that kind of money coming in? It even says here that the Silvergate CEO, Alan Lane, quote, "We're very collaborative with the regulators. We ask them if they have suggestions and what we can do better." So this goes to show that the regulators aren't really coming down on these banks. It's the banks themselves, the larger banks, that are pushing back on these crypto businesses, which just goes to show that they are aware that crypto is a threat to their business and in their business model. And they really are doing everything they can to delay the inevitable. It is going to happen. I believe they know it's going to happen. I believe that they've been positioning themselves for the last year or so to be in the best position possible for when we have a transition into the crypto-based finance. It's only a matter of time. We don't know how long it'll be, but it will happen. So I'll have the links to all three of these articles in the description. I thought it was a pretty good read. I think you guys should check it out. And have a great day. Thanks.